Hi everybody, welcome to another update on the stock screener. Today we continue our due diligence on Pieridae Energy because I got some feedback about the pricing and production. So let's take a look at the chart. It's still in an uptrend and this is probably a bottom and we need to buy it right now because it's bouncing off the long-term moving average. So this is the perfect buy. Now, the feedback that I got was about this calculation. And I have made an assumption that the condensate natural gas liquids go up in price linearly with the natural gas price. So here I only use the ICO gas price. So I haven't included the price of condensate and natural gas liquids and sulfur. So this could, of course, affect the calculation and the numbers. So let's do another calculation, and this time we use the production of all these different uh, products, and we multiply them with the current prices. So ICO gas price, we already know that. That's easy. That's just on the Alberta gas price website, and that's currently around 6.7. But in the long term, it will be at 4.5, and maybe next year at 5. So 5, 4.5. So let's take 4.5. The next one is the condensate price, and you can find condensate price here, Edmonton Light. So currently in CID, it's about 103, and they also hedged it a bit at 130. So in Q4, we will have 115, 120 of condensate price. So I took 103. The natural gas liquids price can be found here. That's the Mont Belvieu. It's at 30 US dollars. So that's about 40 Canadian. And you can see that here also it went to 10 at some point. Today it's at 30, and it went sometimes at 80. So in the high days we had 80, then 20. So probably this will stay around 40. I think this can be 40 US dollars, but today it's at 30 US dollars or 40 Canadian. But this can go to 50 at some point, and you can see already that it has an effect on the valuations. Sulfur prices can be found here, and when you look at the different months and compare it to the realized price of Pieridae, then you come at 160 for Q4. So that's the price that they sell it for. Okay, so we have the prices. Share price is currently at 190 million. Now let's look at the production. So natural gas liquids, I think the production will go up in Q4. So 2,800 will probably go to 4,000 back. And in the previous years, it's around 4,000. So I took 4,000. For net gas, we use 181. That's this number. Then condensate, I just used the Q3 number. It's about the same in previous years. Sulfur, we take 1,500. It was a bit less here in Q3, but I think that it will go back to 1,500. So that's what we use. That's about, I think, 37,000, maybe 38,000, but let's just take 37,000. It's a bit higher than Q3 for production. And per year, it's this. Now the calculation, it's a more complex calculation now. So first is the revenue, E6 times L7. That's the natural gas liquids times L7 is the price. So that's the revenue that comes in, right? Then we take this one, E7, that's the net gas times J7 is net gas price, and divided by the conversion factor to go to gigajoules, 0.947. And then we have the E8, that's condensate, times the condensate price. Okay, and then we do the royalties, 17% royalties removed. Then I added the third-party income. This is per BOE, so we do this times production, B7, right? So that's the revenue coming from the third party. I'm not adding the hedges in because hedges will always go away, so let's not use hedges. Then we add the revenue from the sulfur. 20% comes from the production times the price that they can sell it for, and 80% they sell it for $6. So that's a 6 here. And then we do minus the costs, and the costs is 18.84, which is the operating and transportation costs, times the production. So this is eventually our net operating income. Then we subtract the capex, the SG&A, and the interest payments. Okay, those are subtracted, and then we do a 5 multiple on that, and then we get our number. Okay, so this is our free cash flow after interest payments. And this is just done at different prices, and now we can play with the prices. So currently at 4.5 ICO, we still have an upside of 200 to 400. So that's a double. We still have a double at 4.5. In my previous calculation, we went from 200 to 500, so that's more than a double. But it's a bit the same, right? It's just a bit lower now because the condensate and natural gas, the natural gas liquids have not gone up, right? They have not gone up. They're still at 30, very low level, and that's the reason. ICO has gone up, but the natural gas liquids have not gone up, and the condensate price has actually fallen a bit. So that's the reason why this valuation is lower than my previous valuation, a bit lower. At 5 ICO and a bit higher condensate price, you could say this could even go to 110, and oil is going to 90, so this could go to 120 at 5 ICO. Natural gas liquids should go up a bit, 45. Then we have an upside of triple from 200 to 600. That's a triple. to go to 5 times free cash flow. And this is even with interest payments. So I think there is still very high upside. And this is the free cash flow per year, around 100 million per year, which is not bad. Okay. So 100 million would give us 500 million market cap value, and the current price is only 200 million market cap. So there's upside to go to a 5x free cash flow. Now let's look at the blue sky potential. Let's say they pay off all the debt, then this goes to 0. You can see that the break-even price is now at 3.5, and it was negative, and it was at 3.7, right? 3.7 break-even, and with no interest payments, break-even price goes below 3.5. That's good. And now we have free cash flow at 100 million for 4.5, and at 5 ICO we had 150 million free cash flow. So here now the upside is 4x, and here it is more than 2x, almost 3x upside at 4.5 ICO, which is probably the average price for the next years for ICO. Now, blue sky, let's say we have oil going to 100 at 5 ICO. That would probably give us 130. So this has gone up. Natural gas liquids will go to 50. So around 40 here, 40 to 50. Could even go to 60 CID. Let's take 55. You can see that this is going higher and higher at 5 ICO. So this is the upside potential. If oil goes up, then you can see that the valuations go up. So 200 to 860, that's 4.5x. Very good upside by using conservative numbers and a bit higher oil price. Could go to 100. But now comes an even higher upside potential. So you know that their sulfur is hedged at $6. 80% of that is hedged at $6. Now let's say that we are in 2026 and those hedges come off. So instead of $6, they get the full price, which is 160 sulfur. And this gives a huge difference, a massive difference. So here, this 6 goes to the market price in 2026. And look what happens. The whole curve shifts upwards at the current sulfur price. I don't know if sulfur goes even higher, then the potential is even higher. So you can see now that the break even is even lower. The break even price is below 3 when we can sell off the sulfur at market price. And that's the M4 here, 160. But now let's say that we have a potash boom and potash goes back to this price here. So we have 730, 650. Currently we are back to 200. But let's say that we have another potash boom and this doubles again to 500. what happens, then this can probably go to, let's say, 250. What happens then? Then the curve shifts even higher. So then we have upside of 4.5, 5 ICO from 200 to 1 billion to 1.5 billion. So that's 6-7-fold. Yes, 6-7-fold upside based on 5 times free cash flow. If this goes even higher, 6-7 times free cash flow, then it will go to multi-billion dollars. So I think the prospects of the future is looking very good for this company. And don't forget, when they pay off all the debt, they are going to start drilling and increasing production. Production is currently below 40,000, but it was at 50,000. So they can increase production, start drilling, and they are already drilling some wells, but you know their capacity is currently at 50%, and they can increase that capacity probably to 70%, and they have the land package to do it. Here you can see it. 60%, 50%, 45%, that can be increased. They have the infrastructure. So if production goes even higher, I mean, then this is going to go to multi-billion dollars in valuation. So this was the update that I wanted to give. When we go into more depth in the production numbers and the prices, then you can see that it still correlates to my old calculation, a bit lower, but the blue sky potential is still very high in the coming years. We're talking about 5x to 7x upside. So we are going to buy more of this. It is at a very nice bottom price, and you can buy at the dips here, and we will go much higher. I'll see you in the next video. Bye.